How's everybody doing? Welcome, welcome. Didn't forget here today. Apologies about yesterday. How's everyone's day treating them so far? Knock, knock. Anybody there? Hey, Ron, how you doing? What's up, DC? How you doing? Good. Who wants to kick things off here? Who's got the first question for us? Yeah, I'm all right, thank you. What's up, Dave? So who's got first question, or what do you guys want to talk about today? Anyone? Anyone got any questions here? Well, it's all relative, right? We were willing to look at this with increasing volume kind of up until this range. And that's why we draw out these levels or map out these levels, right? So if price action does get extended, then we're able to look for secondary setup triggers. I would fight back against the feeling of it's quote unquote dangerous, right? Or something along those lines. The low of day here was 29,920. If we look at that from a like pre-market perspective, pretty much just yesterday's low. So getting a breakout through previous low of day isn't a crazy setup or one that doesn't indicate a tremendous amount to follow through. If we look at it from even like a market perspective, right? It was about, let's say, 0.75% of a move with an implied range here today of about 1.2%. So theoretically, we had a lot of room still to have like a reasonable bit of price action. So I'm always just going to trust the volume and what the candlesticks tell me, and then rely on my prep to take advantage of things. Now, the caveat to that would be if it's like 11 in the morning and that early momentum is over and it's done with, and we're then starting to see that follow through happen, that's maybe a lower probability move. But in the first 30 minutes, first 20 minutes of the day, I'm pretty willing to trust that price action. Does that make sense, Dave? All right. So I've been practicing my entries and my exits, but I'm still having a bit of a problem clicking when I see the opportunity and hesitate. It's the only thing that's hurting me. Any advice? So, good question. Generally, the hesitation in an entry or in an exit comes when you don't quite know exactly what you're looking for. So, um, waiting it for it to feel right is kind of the wrong thing. And I want to be careful how I phrase that, because when we're not being very specific on our price or our entry trigger or what we click submit for, then what feels right is not going to be particularly objective. It's going to be based off of um, how I slept, right? What arguments I got into, how busy my previous day was, like whatever it is, right? So there's a million things there. The reason I said I want to be careful there, because for me, the what feels right is where I feel calm in my execution, right? So it's like the muscle memory is okay. I feel calm. Markets have pulled back within my reference price. When I sense that moment of calm internally, that then becomes my entry trigger. What I would focus on here is making that feels right, or making that moment more binary, and then build out from there. So it's almost one of those things where you'll have a slight regression in the short term, because you're going to start to catch a few more trades and maybe some trades that you wouldn't expect. But you need to build up that muscle memory around those entries so you can gain some confidence and basically quantify what that feeling is. So hesitation generally comes from a like missing information. Your brain or your psychology is telling you that something in your plan isn't fully complete. So the way that you complete that plan is to make that more specific and to make that event a binary. The more simplistic that can become, the less hesitation you'll have. If you're always waiting for it to feel right, but you don't have a base level of what that is, then it becomes very challenging to do that consistently. So the way that you build that base level is you make that entry a binary, right? It hits this price or it doesn't. Enter all those trades, track that data, see what it tells you, note down how you felt or why you felt a certain way in your positions, and then adjust your plan from there. So calm pullback is not how price is, how fast it's moving, right? It's how fast your brain is processing things in the moment. So the calm is not an objective price discovery mechanism. It's an objective psychology mechanism, right? So you're not looking for necessarily calm markets. You're looking for a calm mind for when you click that button. And price is the same on every chart. So I wouldn't overcorrect that. The analogy I want to use for that, right, is elevator down, stairs up. So if you're struggling with the difference on TradingView versus Volumetrica, don't use TradingView, right? Just watch Volumetrica and build up that base reference, because it is there. The same price exists on both platforms at the same time. So it's just literally the pixels on the screen that's changing for you. And that's not a good enough reason to create extra hesitation. Just like make it specific, right? Before you enter the trade, like if you can visualize exactly what it looks like, right? You can close your eyes and you can see the trade playing out, and you can see what a win looks like, what a loss looks like, what indecision looks like, and you can truly visualize that pattern before it happens. When it then does happen, you've already seen it and you can execute it, right? So I think that there's a lot of um like make your trading plan specific enough so that you can see it with your eyes closed. And if you can replay that before you enter into your entry zone, right? Give yourself that visualization of what you expect. it's almost like you'll be executing it for a second time. So like trade it first in your mind, see what a win looks like, what a loss looks like, right? And then compare that visual to what price action is actually doing. And then you'll have that specific, right? Because it'll be specific to exactly what you visualized. And that will remove that hesitation. Yeah. I mean, and that's the thing to practice too, right? When you're visualizing your trades, visualize what it feels like to not have an emotional reaction to price action. Practice that, right? Get those mental reps in, and then it becomes easier each time you do it. And that's the lifelong battle. Well, I mean, you guys hear me all the time. I get cranky with price action here sometimes. That's okay. It's okay to have those feelings. It's okay to let them out. It's just not okay to change your behaviors because of them. And then track it too, right? So when you visualize, write down what you think a strong, entry would look like, what a weak entry would look like, execute your trade, and then compare it to what you wanted. Depends on what you're evaluating yourself on, Ron. So if you're evaluating yourself on making emotionless decisions, then amazing. If you're evaluating yourself based on, your max risk or something like that, amazing. You're giving yourself something along those lines. But what did you get stopped out on today? Don't just write down how you feel before and after. Write down what you expected to happen before the trade and then compare what you did versus what you expected. Right? Train that gut effectively. Remember, like trading is half art, half science. But just because something is art doesn't mean that we're just throwing shit at a canvas and seeing what sticks, right? There's still a lot of technique to being a good artist. You have to train yourself to develop that technique. What other questions we have here this evening, team? Anything else? Well, stairs are slow, right? So when you take the stairs, it's like you're running out of breath by the time you get to the top. Elevators are quick, right? They move fast. I don't know how else to describe that. Think of it like rebound on your suspension on your mountain bike, right? You can have it so that your fork bounces right back up and it rebounds really quickly, or you can set it so it's really damp and it absorbs everything. Well, on the way down, right, you want it to be very damp. You want it to absorb all the bumps. You want it to basically bounce back slowly, right? On the way up, right, you want that rebound to be aggressive to basically spring back up to the top. Yeah. And generally, right, what I want to see is the pullback to happen before the breakout, right? So if I'm looking at a pullback here, like one of the reasons why this 10-12 was pretty easy to ignore, because the first move was higher and then it pulled back, right? So it's almost like I got evidence of a failed breakout. If it doesn't make a higher high and then pulls back first, it's a lot easier for me to say that I've got that, compression, that slow move, yada, yada, yada. But if I see that fake out first, it's almost like I'm getting some evidence that my move is failing. So put those two things together, and all of a sudden, you've got a pretty detailed entry plan of what you're looking for. So when I'm judging or I have indecision, right, and I don't know what to do, I just reset the patterns or the skills that I already have, right? So if I'm in a trade and I don't like the reaction, well, I'm probably 45 seconds, 30 seconds, 65 seconds away from that candle closing. I'm going to wait for that candle to close to give me the information that I need. And then I'm going to focus on closing as my P&L is increasing. So if the candle gives me a strong shape, gives me a strong volume profile, and it holds higher highs, I objectively have nothing to be afraid of, or it's behaving how I would expect. Now, it's not a guarantee that the next candle is going to go in my direction or go forever, but I can basically fight against that feeling by looking for something specific. If it gives me just like a strong candle shape, but it's weak volume, like we had on a trade yesterday, right? Where post entry gave us a strong candle, but lowest volume of the day, that's not telling me a very strong story. And now my feelings are justified and I can look to get out as P&L is increasing. So I would just delay that decision. And if you can't delay that decision for whatever reason, make your focus to be closing as the P&L is going up, not as it's going down. So if you're struggling to find your exits, right, you want to make that process consistent by waiting for the candle to close. You have a consistent or a binary execution decision, and then you can figure out from there what's broken, right? What's tough to evaluate on your exits is if you do a different thing each time, it's really hard to train your muscle memory on how to behave, and B, your pattern becomes really cloudy, right? There's no repetition or consistency, so you're constantly bouncing between too many variables. If you make that process consistent, it'll be obvious what isn't working, and then you can fix from there. So does having access to level 2 data help as much as I think it might? It seems that a quick overview during some trading decisions might help fine tune strategy/risk. It has helped stock options trades. Personally, I don't use level 2. I don't care about it. Primarily because on something like NQ, which is the third most traded contract in the world, there's just so much information there and things move so fast that I don't feel like I'm able to pick and choose the information that might actually give me the edge. But that answer comes with a lot of survivorship bias, right? I've been trading almost 14 years now. It'll be 14 years in September. And I've never relied on level 2 data. And I would consider myself, well on my trading career and doing all right for myself trading. So, look, find the tools that you think work for you, become an expert at them, and tune out all the other noise. If you start to add too many things to your process, you end up just causing yourself analysis paralysis. No matter what you add or what tool or what indicator or what market data subscription you use, it's not going to ever help you solve for 100%. So find the 50%, 60% that you're happy with get really good at understanding its nuances, and then improve from there. What else we got here? It just moves so fast, right? So it's really hard to actually get a good idea here. Let's see if we can bring it up on paper trading. It's like right now it's pretty slow because it's outside of market hours, but this would be flashing like crazy during the open, right? So you wouldn't have a very good interpretation of how much is actually on the bid, how much is on the ask. Where I would say it becomes valuable, I guess, right, is if you're starting to trade really, really big size and you're trying to avoid slippage. So if you have like 100 contracts that you're trying to trade at 246, but you only see one contract available, you're going to get a ton of slippage, right? Trying to fill that order. That would probably be where I would find a use case for it. But at the size we trade and the market that we trade, I don't think any of us are at that point. What else we have here, team? Can you rephrase your question, Dave? I'm not quite sure what you mean. Like maybe to phrase it a little bit differently, right? If I'm bullish, I want to see bears fail before I enter. If I'm bearish, I want to see bulls fail before I enter, right? So if I'm bullish, I want to see bears fail before I see bulls fail. If I'm bearish, I want to see bulls fail before I see bears fail. So generally, right, you want the pullback, the initial move to be against your thesis, right? So moving away from your confirmation candle, or like inside your confirmation candle. No, immediate pullback is fine, right? Like exactly like I'm saying, you want to see the pullback happen before the breakout. You don't want to see the breakout first. You want to see the pullback first, right? You don't want to see evidence of the other side of your trade fail. You want to see bears fail so that bulls have a clear runway. If you're bullish, you don't want to see a failed breakout like this, right? Where the first move is above your confirmation high and then it pulls back. Makes it really hard to time your entry. So if the pullback happens first, right? If the pullback happens first prior to making a higher high, easier for me to say that I've seen bears fail before I've seen bulls fail. What are the questions we have here this afternoon, team? Yeah, guys, there's no reason I don't bite in these calls. So ask away. If people aren't going to ask questions, I'll just go eat my ice cream outside. I don't have to be here. Come on, we didn't have one of these yesterday. So let's get a few more in. There's no such thing as a dumb question here. Join the club, Kelly. $18 milliseconds versus 10 milliseconds. You're not going to notice that difference, right? So you get nasty slippage and delays in your fills when the market is moving really fast, right? Today we had bouts of really slow price action and then bouts of really fast price action, right? Things move quickly because the book is thin and there's limited liquidity. And so it gobbles up levels with market orders. And that creates environments where you generate more slippage. The DTR website won't handle options trades, only futures trades. So yeah, Kathy, I think that's good, right? Sometimes the best trade is no trade, and it's important to yeah, not get too caught up in something. So Andrew, when you're approaching your drawdown on an eval account, do you trade any differently to avoid breaching the account? Um, no, not really. Um, like I basically know that with an eval, I can take, 3 max loss days in a row. If it happens, it happens. It's not the end of the world. If I fail it and I breach it and I buy another account, I'll be $4,500 better off than what I was previously. So I wouldn't say that. The other reality here is that literally every single trader that has ever traded a prop firm has blown an eval account at some point, and they're gonna blow another one. That's just how it is. So I wouldn't get too caught up on that. Now, if you're blowing like 20 in a row in like a week, okay, maybe there's something that you need to do differently. But if you're following your rules and you're just dealing with a little bit of drawdown, man, that's life. It's just going to happen. So I wouldn't overcorrect. To give you a real answer, I'd probably need a bit more information about your specific trading. But in general, like what's going to happen here is you'll kind of create a damned if you do, damned if you don't scenario where you'll size down on your next trade or whatever it is, and you'll start trading a little bit differently or start being a little bit cautious. And then that trade will be a 60-point win, and you'll be beating yourself up about not trading it like the way you normally would have. And then you'll just chase it and you'll give back those profits or you'll do something stupid or whatever it is. So I think consistency in process is extremely valuable. I wouldn't, yeah, I wouldn't, I wouldn't see the value in changing that unless something in your trading is fundamentally broken. Do you get tempted to trade? Yes. I notice that sometimes it's volatile when NQ is not. Not really. I mean, I will trade it every now and then, but if NQ is moving, ES is going to move 90% or 99% of the time, right? So, no, in general, right? NQ is about twice as volatile as ES is as like a standard basis. So, it's hard to want to trade anything besides that. At least right now, when the market's still so tech heavy, it feels yeah, like the days where NQ moves and ES doesn't move, those usually aren't very good trading days. They're extremely correlated. They move pretty much in unison. And if I'm going to get a move on NQ, I probably could have gotten the same move on ES, but the same move on NQ is worth twice as much as the same move on ES. So I'd rather focus on the one that has more upside. Like there's always an outlier, right? And there's always like a hot name that runs as crazy as it possibly could. But I don't know. I don't have the or I feel like I have a better edge trading something that I become extremely familiar with. And yeah, I think it's more valuable to be an expert than like trying to chase the hottest hand. At least for me, I haven't found that to be the most profitable. Um, by really like honing in on NQ and putting honestly most of my energy into trading that, like 99% of my day trades are on NQ. It has led to the best trading year of my career, or at least my best trading personal year. So again, it's kind of like confirmation bias or survivorship bias with that makes it hard to want to change. I don't. I don't trade in the afternoons. No, I trade just the mornings. Yeah, but your job as a trader isn't to trade, so you could still be a 9 to 5er, but you just got to put your energy into studying your decisions, studying the market, and learning from how you behaved that day, right? So the hard work isn't the trading part. The trading part's the fun bit. The hard work is everything you do outside of market hours to prepare yourself for your trading day. So, in my opinion, right, big part of my job is exercising, eating well, going to sleep on time, reviewing my trades, studying my decisions, right? Did I like how I behaved? Did I not like how I behaved? Why? What can I change? And so answering or going or working on those processes, that's a full-time job. And then, the other part too is that at least I found if I'm just like at home all day staring at my computer, not doing anything enjoyable or doing anything fun, my trading suffers. When I go out and I do cool things and I satisfy like my dopamine in other ways, then I usually end up trading better long term. So you got to find that balance and you got to find ways to fill your time because it will make you a better trader. And if you're deliberate in how you use that time, everything else will compound nicely. Well, for me, on this big candle rip, there wasn't a good entry on this at any time, right? It was just something that ran away and I didn't have an opportunity to get in. Maybe the entry here could have been on like the fake out at 9:54 or something along those lines, but I would have closed that trade before 10 a.m. because of the data dropping. That was orange folder, so I would have gotten out of this. There isn't really a scenario here on the 2 min, on the 3 min, or the 5 min where I would have had a reasonable entry. Sometimes the market just moves without giving you a chance, and that's life. All right, let's go. Final call for questions here. Final call for questions. And I'm just saying that there wasn't an entry based on my strategy. Maybe some other technique would have caught that, but not this guy, not today. I mean, that's just a part of the game, right? I'm not swinging for home runs. I'm swinging for base hits. Get enough base hits, you'll hit home runs along the way. Yeah. And P&L is a lagging indicator, right? You don't get rich and then become a good trader. You become a good trader and then get rich. All right. Anything else here, team? Anything else? All right. Well, if no further questions, I'm going to kill it here for the evening. See you guys all in the morning. Peace.